Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of the Boeing company, ticker symbol BA. Boeing produces commercial aircraft and is also a major aerospace and defense firm. Currently, they're trading for $149.78 per share. Year to date, their stock price is down 25.5%. Over the past year, their stock price is down 29%. Going back 3 years, it's been pretty rough on Boeing since the company has had safety issues due to some fatal accidents involved with their 737 MAX. The company is down 60% in the last 3 years. Over 5 years, they're down 39%. Over 10 years, however, they're actually up at a rate of 8% compounded annually. And going back 17 and a half years prior to the global financial crisis, Boeing has compounded at a rate of 6.5% compounded annually. So despite losing over 60% of their share price in the last 3 years, the company has still performed decently since the global financial crisis. So Boeing is down about $80 from their 52-week high, and they're up about $30 from their 52-week low. A little under 2% of their shares outstanding are currently sold short. Boeing is a large business. They have an $88.5 billion market cap. For some background about the business, Boeing is a major aerospace and defense firm. The firm operates in 4 segments: commercial airplanes, defense, space and security, global services, and Boeing Capital. Boeing's commercial airplane segment competes with Airbus in the production of aircraft, ranging from 130 seats upwards. Boeing's defense, space, and security segment competes with Lockheed Martin, Northrop Grumman, and several other firms to create military aircraft and weaponry. Boeing Global Services provides aftermarket support to airlines. The Boeing Capital segment offers financing services and manages financing exposure for a portfolio of equipment under lease obligations, sales, financial leases, notes, other receivables, as well as investments. The Boeing Company was incorporated in 1916 and is based in Chicago, Illinois. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of the Boeing Company based off of their business fundamentals. So this analysis is going to continue to improve and get better over time. It's still a work in progress, and it's an opportunity to learn in public. So with that said, let's get right into it. Starting off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. The reasons for this are that the average publicly listed business earns about a 7% return on capital, and over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns. So we can build in some margin of safety for ourselves based on the overall quality of the business by only looking for businesses that earn twice as good as average returns on capital. So Boeing, up until 2019, when they had their first tragedies with the 737 MAX, was producing absolutely stellar returns on capital. These returns, around 70%, are phenomenal, more than 10 times what the average business is doing. However, since their tragedies with the 737 MAX and the overall beating that the aerospace industry has had since the COVID pandemic, they've had negative returns on capital in the last 3 years, and including the last 12 months, they've also had negative returns on capital. Amazingly, however, because of these outstanding years in 2017 and 2018, averaged out over the last 5 years, Boeing still earns a 22.5% return on capital. So this is going to be a check to start off here on metric number 1. So while when the business is kicking in high gear, they produce phenomenal returns on capital, we do see that the business can be vulnerable, especially when their commitment to safety slides and as they've been hit by a black swan event. So the business is not bulletproof and it's not as ironclad as it once may have thought to have been. But if they're able to right the ship, it looks like they still do have the potential to generate outsized returns on capital. So again, this is going to be our first check here on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We want their revenues, earnings, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature, meaning that either all 3 of these metrics are going to be up for a check, or if even one of them is down, this entire metric is going to be an X. Here we just get to witness more of the absolute pummeling that Boeing has taken recently. From 2018 until 2021, all 3 of these numbers are down. Their revenues have been cut by nearly 40%, and both their earnings and free cash flows have swung from being positive to being negative. So this is an X here as all 3 of these are down. Boeing has had a rough go of things over the last 4 years or so. Next up, metric number 3, here we're looking at the business on a per share basis from the perspective of an individual shareholder. we want to see earnings per share growth over the last 5 years. So this builds off of the last metric. As we learned there, their earnings have shrunk over this time frame, and they've actually gone negative. They've been negative in the last 3 years, and they're still negative in the trailing 12 months. Surprisingly to learn here, though, their earnings per share have not gone down at a rate that's as fast as their earnings have gone down. And this is because Boeing has actually repurchased shares. So as the company's share price has cratered, they have been buying back shares, which is good for long-term investors, especially when a business is buying back shares when the company is trading below intrinsic value. Because when you're purchasing a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. And so when a business buys back shares, they're increasing your ownership percentage, which ultimately will increase your percentage of the business's profits without you having to spend a dime. It's as if the business is making an acquisition of itself. That could potentially be a bit of a silver lining here, that at least Boeing has not been diluting shareholders over this time frame too. But this is going to be another X here on metric number 3. So far through 3 metrics, we've only got 1 check. Metric number 4, here we're looking for free cash flow growth per share over the last 5 years. Similar story here. Boeing was doing phenomenal in 2017 and 2018. And then things took a turn for the worst. 2020 was extremely rough on the business. They were losing about $35 in cash per share in 2020, which at a stock price of only $150 today is pretty horrendous. So we noticed the same things here, that their free cash flows are down over the last 5 years. But again, they've been buying back a slight amount of stock, so it's not as bad as it could potentially get for Boeing. Even in the last 12 months, these numbers are both negative. Over the long run, the earnings and the cash flow that a business produces should about balance out. They should be about in tandem over an extended period of time. This is another X on metric number 4. It's looking more and more like Boeing is going to be dependent on some sort of turnaround to justify it as an investment here. Given the fact that they've continued to do so poorly over the last 3.5 years, if they were able to right the ship and get back to their competitive position from 2017 and 2018, things could be potentially very lucrative for the business, but that's a big if. That's going to depend on their execution and a more nuanced understanding of the business overall. Metric number 5, here we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced in the last 5 years. So Boeing, as of the end of last year, had about $44 billion in net debt. Currently, they have about $45.5 billion in net debt. And unfortunately, over the last 5 years, they've actually produced negative free cash flows when all of their numbers are tallied up and considered as a whole. So this is going to be an X here. Relative to their abilities to produce free cash flows, the business is looking overly levered. They were in a pristine financial condition in 2017 and 2018, and since the business has had operational hits, things have deteriorated pretty quickly. They have a lot of leverage. The reason we wouldn't want to invest in overly levered businesses is because they tend to do the worst during economic downturns. If there's another big shock to this company, they would be in a very precarious position as they already don't have positive free cash flow, which means that they would have to raise money somehow, either by diluting shareholders, issuing more debt, or selling off assets. Again, because of their weak balance sheet right now, that would likely be at a disadvantageous spot for the business. But as with all things, that's just a possibility, no guarantee there. However, this is going to be yet another X on metric number 5. So far through 5 metrics, we've only got 1 check. Finally, metric number 6, the big metric of all, we want the yield of their average free cash flow relative to their total enterprise value to be above 5%. So this will give us a slight risk premium to the risk-free rate and give us a potential reason to be interested in the business. We use total enterprise value here because it is a more realistic economic picture of the business than market cap alone. Total enterprise value takes into account both the business's market cap and its net debt position. So Boeing currently has a $134 billion total enterprise value, which is about $46 billion over their market cap. As we learned in the last 5 years, they produced negative cash flows overall, and in the last 12 months, they've also produced negative free cash flows. So metric number 6 is going to be an X. It's just going to be too difficult without the business producing positive free cash flows to give any sort of realistic expectation for evaluation of the business, minus just outright speculation. Until Boeing would get to a spot where they have positive free cash flows, this business would either go into my no or my too hard pile. Keep in mind that this analysis is not financial advice. It's not a buy or sell recommendation of any security. And just because these metrics have been X's does not mean you need to totally despair and give up hope about Boeing. It just means that it might not be a screaming opportunity like some other businesses. If you're interested in learning more about the business, I highly recommend diving into the company's 10Ks. Read through those to get a better sense of the history of the business, and read through some of their recent earnings call transcripts to get a better understanding of the potential risks, challenges, and opportunities that the business faces. Get a sense for the management of the company, whether they are both competent and possess integrity, and understand how they're approaching capital allocation going forward. So Boeing could be a turnaround story. That's certainly a possibility. They've been able to shrink the amount of free cash flow that they're losing year over year for the past 3 years, but it's going to require a deeper understanding of the business to know one way or the other. Then just to note here we're looking at Boeing's dividend profile. Currently, Boeing no longer pays out dividends. Previously, they had paid out dividends up until 2020, in fact. They stopped paying them out during the early stages of the pandemic. Up until 2018, these dividends were well supported by the business's cash flows and were actually pretty reasonably and modestly paid out. Their dividends seemed very conservative to the amount of free cash flow that they were generating. Based off their dividend policy, it looks like they thought that 2019 was a fluke and that the business would be able to return to some sense of normalcy despite their safety mishaps. Then when the COVID-19 pandemic struck in 2020, they really realized the situation the company was in, and they decided to cut their dividend going forward. If you're potentially interested in a business for its dividends, it's important to do the work like we're doing here to understand if that business's dividends are supported by their cash flows. It looks like Boeing was able to reasonably adjust their dividend policy once they realized the true nature of the situation they were in. So personally, I would only expect this business to start paying out dividends again once they were able to produce positive free cash flows. That's the sensible thing to do as a business. Potentially keep an eye out for Boeing to issue dividends and have them be supported by their free cash flows to give some indication that the business is righting the ship. So in summary, the Boeing company, due to their extremely high returns on capital in 2017 and 2018, they're still earning above average returns on capital. However, the company has really hit the skids since 2019. They've experienced a number of safety setbacks due to some tragic accidents, and then the business was really hammered by the global COVID-19 pandemic. Their revenues, earnings, and free cash flows have fallen dramatically. The business has had to take out a ton of debt while they've been producing negative free cash flows and consuming cash. The only bright side here is that it looked like the business was able to readjust its dividend policy and was not doing anything overly imprudent there, and that the business has not had to dilute shareholders over this time frame. They actually bought back some shares when their stock price cratered. So if you're interested in Boeing, potentially keep tabs on the business, learn more about it, understand the company's history, again, understand its challenges, opportunities, and risks going forward by diving into their 10Ks and getting a more nuanced understanding of the business. As a value investor, you ultimately want to understand a business as if you owned 100% of it, and you can understand the essence of that business, knowing all of its ins and outs. Again, this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. Instead, it's a holistic and beginning understanding of Boeing to determine whether it's worth your while to dig in and learn more about the company. So with that said, that's it for today's fundamental stock analysis of the Boeing Company, ticker symbol BA. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Boeing with me, and have a great day.